Hello guys, welcome back to another week, and it's the last week of the month. And fun fact is that the 1st of April, it's going to be on a Monday, so it's going to be pretty cool. If I'm not wrong, it's going to be on a Monday. But yeah, welcome to the last week of the month. There's a bunch of things happening, not too crazy, okay, not too much data in terms of data points. There's not much data coming out from those G10 economies, but there are some very important ones that we're going to be discussing today. But before we go further, guys, I have to tell you, we'll be having webinars every Tuesday, Wednesday, and Thursday. So if you've not yet joined me on the Telegram, you should join me on the Telegram right now. The link is on the description and it's free. We don't charge anything, and I've been updating content every day or most of the days inside of the Telegram, sending some analysis, sending some feedbacks from the market, sending some videos that I've posted here on YouTube as well. So there's a bunch of content, as of course every Tuesday, Wednesday and Thursday we have the webinars, and I send the link to there and a reminder as well 1 hour before, so you guys can remind and join me live on the webinar Tuesday, Wednesday and Thursday, 5 to 6 p.m. every week. All right, that being said, don't forget to subscribe to the channel and give us a thumbs up as well on this video. And let's go to the video. All right, so last week was a very crazy week, I would say. A lot of things happening on US, on China as well, on Europe, and a bunch of things. We have the stimulus on Europe. I actually made a analysis today from that content, from that topic. So if you've not yet have the look at it, go into ACY website, go into learn and then market analysis, and you can have a look at the latest market analysis that all of our analysts here does. But yeah, I've done an analysis on that, and we have more than 500 billion. You didn't listen wrong, billion euros going to German to do, a little bit of, I would say, put up a little bit of makeup, if you know what I mean, because that won't change anything. It's just going to put a little bit of makeup on top of German, and then in the end, in the next 5 years, everything will be the same, and then another stimulus package will come in, and the market will buy German 30 again, and that's exactly what it happens 5 years ago, 10 years ago, 15 years ago. Exactly the same thing is going to happen, all right? So 500 billion going to German, and the interesting point here is that the business in Europe, the ZEW, Europe, is being pretty hot from the last 3 years. It's nearly the top of the range from the last 3 years. So I guess a lot of good GDP data will come up from Europe. But anyways, so tonight we're going to have a bunch of PMIs, UK, Europe, USA, all of the other economies as well. So that's very important to us to be looking at the manufacturing PMIs and the services PMIs for simply a few reasons. One of the first reasons is, how is the economy treating the producers? How is the business actually going well or going bad into the economy? Because think about, when you go to a coffee shop, you ask for, a croissant and a coffee. You're spending somewhere around, depending where you live, but here in Sydney, somewhere around $15 to, $17, I guess. Just depends where you at. Maybe $10 to $15. But you pretty much giving money to the to the business, and they will pay the person that serves you, right? So that's the service, and that's the manufacturing. Manufacturing is a little bit different. So think about, you buy a phone, right? So Apple has a manufacturing business, and you buy your product, they pretty much have two, manufacturing and services, because someone is actually building the service, doing the service, and the manufacturing fabric as well. So how is that on the economy? Is that good? People are still spending money. People are still spending quality time with others, and for that reason, movement, like making the economy greater again, or is everyone still a step back and no one wants to spend money? So for today, that's going to be really good for us to understand a little bit more about those, all of the lists. It's a bunch of countries that it's going to have the release. We're going to have the CPI from UK as well for this week. It's going to be really important. The pound has been somewhat stronger, but not because the pound, it's because of the weaker USA. So remember what I said last week, there's a lot of money outflowing from US US and inflow into China and Europe. And UK gets a little portion of that, of course, because of the higher yields. So I guess we will continue to have that for the last week of the month. And then the second quarter, we will have the rebalancing of the portfolios from hedge funds, institutions, banks, mortgages, etc. So that will change a little bit the perception of the market, and maybe we can still have an euro dollar down to 105, maybe another 500 pips drop. Who knows? So there's a lot of things happening for the second quarter of this year as well. A lot of tariffs coming in implementation in April. So let's see how the market will react into it. And then, of course, to finish up the week, we're going to have some data from USA. If I'm not wrong, is going to be the GDP. Okay, so the GDP from US, it's really, really important, because one of the things I find interesting is Trump say that last release of the inflation and last release of the job numbers, Trump say that this is not from his government still. It's from Biden administration. So there's pretty much like 4 months that he's been into administration, and that's not from him. That's from the past government. So kind of interesting what he said. As well, he posted a Twitter or an X saying that the Fed should cut the rates because the tariffs will get implemented in April. Is he engineering all of that just to the Fed to cut rates? That's a good question as well. What do you think? Put down in the comments. Do you think Trump is doing all of this, literally, tariffs, taxes, and all of the other things that he has in mind to do, the Doge part of the government that is, from Elon Musk? Do you really think that he's engineering all of that to make the Fed to cut interest rates? Or do you think that Jerome Powell won't listen to him and will continue to maintain higher for longer? As Jerome Powell say that the rates are higher for longer, and the market seems to like that. So put down in the comments, what do you think? Well, in my opinion, I think that no. Jerome Powell won't listen to Trump. Trump can do whatever he wants, but in my opinion, at least it should be, the central bank is an independent organ. So he won't care about the president or the MP or whatever who is say. Okay, so it's completely different stuffs. Anyway, so coming back here, we're going to have the GDP from USA. It's going to be really important as well to see how the economy is growing. If we have somewhat of a hot than expected PMI, we may have a average GDP or a little bit up from what is expected. That's my opinion. All right. So for this week, I don't expect much volatility in the market from US and Euro. I do expect more volatility into the Asian currencies, Oceania currencies like Japanese yen, New Zealand dollar, Chinese yuan, Australian dollar. So these are the currencies that I'm expecting more volatility. Maybe perhaps long in Australian dollar would be a good option, but at the same time, we don't know, because something can happen on US and then becomes a short on Australian dollar. So always be focusing on those headlines that are coming out from US, Europe, and etc. Guys, thank you so much. I hope it could help you a little bit and understanding what's going on into this week. If you have any questions, bring these questions tomorrow on the webinar, or put down in the comments and I will make some time to read and answer you on the comments. Please subscribe, give us a thumbs up, and share this content with your friend. I see you tomorrow on the webinar, or I see you in the next video. Cheers guys, bye bye.